So today we're going to be talking about a very interesting topic that I'm sure not too many of you are aware of it. But we're going to be talking about employee retention tax credits. And we have a very special guest with a lot of experience in this topic. Jeremy Haas, welcome to the show. How you doing,
Thank you.
Jeremy?
I'm doing well. Yourself?
I'm doing great, thank you. Jeremy is the VP of Business Development for Jones and Associates, and I'm gonna let him introduce himself in a minute. But for all of you that are new to the show and they are just starting to follow the Hispanic Chamber of E-commerce or of the U.S. Business Association of E-commerce, these are webinars that provide access to valuable resources and education that helps your business survive and thrive in the marketplace. Accounting, finances. We talk about cash flow management and finances on Monday, and today we're talking about tax credits. So Jeremy, the stage is all yours. For all of you that have Q&A, questions throughout the presentation, please feel free to share them on the chat, and then we will ask Jeremy at the end. So Jeremy, welcome.
Perfect. Thank you, Tade. I really appreciate you having us. As Tade said, my name is Jeremy Haas. I'm with Jorns and Associates. Jorns and Associates is a firm that specializes in tax credits and incentives, and specifically right now, the employee retention tax credit. The employee retention tax credit's been out for a while, but it's kind of been a moving target, and it's now available for more and more companies to take advantage of it. And we're going to go through some of that today. Perfect. Can you go to the next one? So, like I said, Jorns and Associates was created to assist businesses navigate the complex rules, of the tax credits and what was going on with the CARES Act and the economic stimulus programs that were out there. We are 100% focused, on taking care of and assisting with ERC credits. There's a lot of firms out there that do a lot of different tax credits and incentives, but very few that are 100% focused on it. We're comprised of tax veterans, with decades of industry experience, former IRS auditors and IRS employees. So we've got a really good understanding of how this program works, and what's available to the business community out there. Next. So some base requirements on ERC, or basics on ERC, and what ERC is. ERC stands for the Employee Retention Credit, or ERTC, Employee Retention Tax Credit. And what it is basically a government stimulus out there to benefit and help businesses, that were struggling throughout the pandemic. It's available to any company, 3 to 499 employees, and they must be W-2 employees and have had some impact from the pandemic. Some highlights on this, $1.9 trillion was earmarked for this program, up to $26,000 per eligible employee. This is the max benefit that companies can get. And some really interesting parts that, you guys are familiar with PPP and some of the other stimulus programs out there. This is not a loan like PPP. This does not require to be paid back or forgiven. And then there's no stipulation to what you as the business have to use these funds for. When PPP was released, you received a list of things that you could use it for, and a very strict accounting. Once this money, this ERC money, gets into your account, it's yours to do what you please. You can buy equipment, expand your business, help your employees, whatever your choice is. It does not impact PPP loan forgiveness and does not require a reduction in revenue. Next. Some of our results that we've gotten, to date, we've done about 2,000 of these ERC filings, and we have gotten almost $2 billion worth of money to companies out there. And this is just some examples of some of the industries that we've been able to impact. Mobile pet grooming companies, churches, construction companies, insurance agencies, pizza shops, car dealerships, just a significant amount of money to be able to impact these businesses and provide them this assistance that they need throughout these times. Tade, real quick, I just want to see the next slide. I think you may actually have the wrong presentation. No, no, okay, we're good. Um, so, a ton of different businesses, okay, that we can assist in every different industry, and the impact, okay, that these businesses had, okay, doesn't necessarily have to be from a revenue standpoint. There's a lot of ways these businesses have been impacted. Your businesses have been impacted that were not necessarily from a revenue standpoint, and we'll get into that on the next slide. So some of the qualifications. There's a number of ways in which you can qualify for ERC. The main qualification where most people, okay, that were familiar with ERC focused on was a reduction in revenue. And where that is still a qualifier today, it's not necessarily a requirement. There are other areas in which your business can qualify. And I'm going to read a little excerpt here on the upper right-hand side. Full or partially suspended operation during any calendar quarter in 2020/2021. Um, and the part I want to focus on is a partial suspension of your operation. Partial suspension, according to the ERC guidance, is very broad, and so there's a lot of things that qualify under partial suspension of operation. For example, if you're a restaurant and you had to close your dining room and only do takeout dining, that is a partial suspension of your operation, and you would qualify under that section. If you're a hair salon and you went from walk-in appointments to appointment only, that would be a suspension in your operation. If you had a small lobby or a small dining room or a small facility and you had to limit the number of people that were allowed in there in order to comply with the social distance guidelines, that would be a partial suspension of your operation. And so you guys can kind of think about that as we're having this conversation on how your business may have been impacted, and how you may qualify for this. And we can have you can obviously ask any questions and we can have a more in-depth conversation from that standpoint. Other areas of qualification, if you had to go and move your employees working in a virtual environment versus working in the office, and you had increased expenses in buying computers or laptops or iPads, high-speed internet for employees, okay, to be able to get them to be able to work at home, that's a qualification. The cost and expense of PPE and additional increased sanitization measures, that's an increase, okay, in your expenses, and that would be a qualification. If you weren't able to quote your clients or meet with your clients in person and everything had to be moved virtually, those are all qualifications. So there's a lot of different ways that your business can qualify outside of the traditional you were impacted from a revenue standpoint. Next slide. This is just some examples of some results we've gotten. This is paid out directly via a check. It is not a credit as most people would think of credits. This is the first time in the IRS history that this has been paid out via a check. And these are significant. I mean, there's almost $1 million on this page. Next. This is another one that we got. This happens to be a car dealership out of Ohio that we were able to help. $740,000. That's a huge impact for a business, okay, especially as they're going through this pandemic. Next. So some frequently asked questions I get, okay, and obviously you guys probably have your own questions, but what's the processing time to know if you qualify, okay, and for how much? Our initial processing takes roughly 3 to 4 weeks from the time we receive all the documentation to the point where we're able to get back to you and tell you that what you qualify for and how much you qualify. And on that call, we'll run through what you qualify for in 2020, Q1, Q2, and Q3 of 2021, and then the justification behind that qualification. Next question: when will companies get paid their ERC money? Currently, the process is taking 20 plus weeks. I know it says 20 to 30. We're seeing 20, 25 weeks before companies are seeing their first checks. There's a lot of things pushing the IRS to really bring that processing time down, but that's what we're seeing right now. What type of documentation is required? The initial document request includes PPP loan information, your original 941 documents, payroll details, P&L statements, and then our client questionnaire. And to kind of go back in that client questionnaire will really cover and help us create a narrative on how your business was impacted and what changed from your business from 2019 to 2020, 2021. My company already took PPP money, and do they also qualify for ERC? Yes, in December 2020, the rules were amended that allow both PPP and ERC to be applied for. There is an offset, and we'll have to take a look at that PPP loan information, but you can apply for both PPP and ERC. Again, my company did not have a reduction in revenue. Can we still qualify? Yes, there's still qualifications for companies that didn't have a reduction in revenue. It's not a requirement to have that reduction in revenue anymore. Next slide. Our PPP2 loan forgiveness has not been completed. Will this affect that? No, ERC filing has no impact whatsoever on the PPP forgiveness. My CPA already looked at ERC and determined we don't qualify. This is probably the most common objection we get when we're talking with companies across the country, big and small. Unfortunately, most CPAs and accounting firms didn't stay up to date with the changes in ERC. Like I said at the beginning, this has been a moving target from day one, and we find that most companies that were told that they didn't qualify by their CPA were misinformed and actually do qualify for part or all of the ERC periods. And we have done that with multiple companies where they were told originally they didn't qualify. What is a partial shutdown? We kind of talked about this. The IRS guidance on a partial shutdown is very broad. Partial shutdown can mean several things: limitations on capacity, reduction in hours, appointment only, limited services to comply with social distancing and health department orders, limited staff to cover hours or jobs due to COVID-19 exposure, and quarantine guidance. These are just a few examples of what a partial shutdown of your operation may be. When we're talking about limited staff due to COVID-19 exposure and quarantine, almost every single county across the country has COVID-19 exposure and quarantine guidance rules. Typically, it's 14 days where you're supposed to quarantine, and that can really hurt somebody's business if they don't have the employees to take over that position and cover the hours that were being worked. Next question: my business is having a great year. We made more money in 2020, 2021 than in 2019. Can we still qualify? Answer to that is yes. There's several ways the company can qualify, even if they've made more money during the pandemic than before. There's not a strict requirement for reduction in revenue. And then the last question here: my company was essential company during the pandemic. Can I still qualify? Again, the answer is yes. There's still qualifications for companies that were deemed essential workers. Just because they were classified essential doesn't mean that they weren't impacted by the pandemic. Next slide. So what does this cost, for your company? Jorns & Associates charges a 15% contingency fee based on the money we get our clients. That 15% contingency isn't due until you physically have checks in hand from the IRS. So there's really zero financial risk for the company. We do ask for a $2,600 deposit, but it's fully refundable. So in the event we're not able to qualify your company, that $2,600 will be returned immediately back to you. Otherwise, if we do get you qualified, that deposit gets credited towards the contingency fee. And we'll know very early on, within that first 3 to 4 weeks of getting your documentation, whether you're going to qualify. And if you're not able to qualify, we'll return that to you. Our success rate to date has been very, very high. I think out of the 2,000 plus companies that we've been able to qualify and file for, I think we've returned deposits to about 7 of them. Next slide. So kind of process and timeline and how this works. We've gone through a lot of this, but for companies that are interested in moving forward, we can have a more in-depth conversation via Zoom, go through that information, and then I can send you over an engagement agreement that explains everything in black and white. On top of that engagement agreement will be a document request and the questionnaire. And again, we're looking for 941s, payroll details, PPP details, and then the P&L statements. And we try to make the document request and document process as simple as possible. We understand you guys are all running businesses and you don't need another job, so we really try to simplify that as much as we possibly can. Once we have everything, we'll go through that virtual meeting again with you and our accounting team, review all of the 941s, the qualifications, and the justification behind it, and then we'll mail those documents over to the IRS. Like I said before, approximately 18 plus weeks, right now we're running about 20, you'll receive your checks from the IRS, and then we'll invoice the remaining balance that's due. Next slide. And that is kind of the run through on this. So I know, okay, some of you guys can chat in. I'd like to answer any questions that anybody has, as you know, this is a lot of information. And I'm sure for some of you, this is brand new information because the IRS has not done a good job of getting this out to the community, especially when we're talking about minority communities. For some strange reason, they've not been able to get this out, okay, the way that they should have. And there's a lot of money available to your businesses that can benefit you guys. Okay.
Jeremy, thank you so much for providing this
Absolutely.
valuable information. I know that many businesses can benefit greatly from this opportunity. And what we're going to do, I have a couple of questions here that I got through the chat, but I want you to know that what we're going to do is we're going to share this presentation through our newsletter, and we will send also the slides, in case someone wants to print them for all of those that are going to be watching this presentation later. And the reason why I want to do this because of the last comment that you made, Jeremy, that unfortunately a lot of small businesses do not know about this credit opportunity, the employee retention credit that is available to them. And I think if the government puts out these programs for the small business community, we need to take advantage of them, especially throughout these critical times where a lot of small businesses are struggling, to make it in the marketplace. And we have to work with companies like Jones and Associates that are up to the latest information in regards to this tax credit. We have one question. You addressed some of the other questions that I got, but I still have two more questions. One is there a minimum number of employees to apply for the ERC?
So typically three. Three is kind of the minimum number, okay, in which we can work with. And there's some restrictions on ownership and owners applying. So three kind of covers that. So if there's 3 employees, we shouldn't have an issue moving forward.
When you talk about restrictions on ownership, can you elaborate a little more on that?
So the reason why we say three is because when we realistically it's two, but if one of them owns the company or owns I think greater than 50% of the company, then they would qualify, and then we're down to 1 employee, and one we can't file for. So we say three so that we cover ourselves from that standpoint.
The other question was in regards to the upfront cost to work with your agency, but as a reminder, can you tell us again, like the 15% and the 2,600 deposit?
Sure. So the 15% contingency is based on the amount that we end up getting the company, and that 15% is not due until till the company physically has checks in hand. And so you guys know everything is tied to your EIN or your employee identification number. So those checks will be mailed directly to you. We don't third party in that. We don't handle any of that. We can track that from the IRS side. So when checks go out, we'll know that that's happening. And then the only thing that we ask for up front, okay, is that $2,600 deposit. And that deposit's fully refundable. So in the event we can't qualify you, that $2,600 will go right back to you. Otherwise, it's credited towards that contingency fee. So it's 15% of whatever we get you minus the $2,600 that you've already paid.
From the moment that you receive all the documentation that is needed and the business owner fill out the questionnaire, how long do they have to wait to know if they qualify for the ERC?
We're typically running about 3 to 4 weeks.
Okay.
Yeah. Obviously, the quicker we get the information from the company, the quicker we can process that.
Yeah. So assuming that you already have everything, it's like 3 to 4 weeks.
At the most, yes.
At the most. Okay. Yeah. And then you mentioned 20 weeks average for the approval.
Yeah, unfortunately, the IRS processing time is not very, very quick. They keep, and it's kind of a testament to the fact that, when we first started this, the processing time was much quicker. As more and more people have started to realize that this program is available and that they qualify for it, that processing time has really started to take more time. because the IRS is getting more and more applications for this. And the one thing that I didn't really address that I want to is kind of the deadline on when this program ends. So the program technically ends December 31st. However, we have plenty of time to file, for these amended returns in order to claim this money. And I'm not concerned about the amount of time we have to file, but it's what the IRS may or may not do and how much money, is still available for these companies. And so those are the things that we're running into. As most people that are probably watching this were aware, when PPP came out, there was plenty of time left to file, but they ran out of money. And so that's one of the concerns that we have with this is when will that time frame be up? And I'm sure it'll be out of money prior to the actual filing deadline.
Okay. So just to clarify, small businesses still have time to apply for ERCs?
Still have plenty of time to file.
Perfect. And well, I think those are the questions that I have, Jeremy. I have one more, and this is coming from me. Do you know, based on your experience, if any industries have a higher probability of being approved, or the industry does not matter?
Industry does not matter. It's really across the board. Like I had in that slide, we've done everything from mobile pet grooming, and that's actually a company in San Diego that drives around in trucks and cuts dog hair, to manufacturers, to pizza shops, to really whatever industry's out there.
Perfect. Well, I'm committing with you guys to share this information ASAP today, because I think it's important for the small business community to be aware of the ERC. Good thing is that we're still on time to apply. And if they learn one thing from the PPP experiences, I'm assuming that most of the companies that qualify for ERC already have their documents in order. At least that's what I want to assume. So if it's just a matter of putting, a new deck together for you guys, hopefully they can do it next week, and they can start working with you. Is there anything else that you would like to add, Jeremy?
No, not really. Okay, you've got my contact information. If you're going to send it out, I'll also, my email address is on there, my phone number's on there. So I'd be happy to set up individual calls with anybody that's interested or anybody that has any specific questions, and we can start the process and claim this money for them, because it's there, and if you guys don't take it, somebody else will.
For sure. Thank you so much, Jeremy. I appreciate your time and the valuable information that you provide to us. I'm glad that we were able to make this happen last minute. Thank you again for taking the time to join us today, and we'll stay in touch.
Sounds good. Thank you very much. I appreciate it.
Take care. Have a nice weekend.
You too. Bye-bye.
Bye.